The International Monetary Fund has cut the global growth forecast as trade wars take a toll. The IMF has also cut India's growth projections for 2019 by 10 basis points. Let's discuss this in further detail with Andreas Bauer of IMF, who joins us right now on the show. Thanks so much, Andreas, for joining in. Now, first to the global picture before we come to the Indian picture as well. Trade wars and a 20 basis points scale down in the economic outlook both for the current year and the next. What has gone into this? Is it essentially only the trade wars and the resultant impact on the developed economies, or do you believe the emerging economies will also contribute this in a meaningful way?
Yeah, good afternoon. I think there's a number of contributors. Part of it certainly is some slowdown that has been caused by the ripple effects of the announced trade measures. I think also we've seen that growth may have peaked a bit earlier than expected in some of the advanced economies that were growing above potential, and they're now kind of returning on a more normal growth path. And then, of course, the higher oil price also meant, at least distributionally, a shift and downward pressure on oil importing emerging markets. So it's a bit of a mixed picture between advanced economies and emerging markets, but still, I think we'd say that growth is steady. It's growing 3.7% this year, and we expect next year as well, which is a reasonably robust clip still, despite the somewhat the cutting of the forecast by 0.2 for the global side.
Andreas, as I look at what you've stated for the US and China, the two countries, the principal countries involved in this trade war, there are significant downticks to their growth targets for next year. Are these based on the current estimates of the amount of goods on which duties are being levied, and if these numbers get escalated, are there further downside risks to the growth numbers for both the US and China?
Yes, so the numbers are based on measures that have been put in place so far. There are some others that are being mulled, and those are not yet built into the forecast. So in general, I think our sense is that looking at the growth forecasts, the risk is probably tilted to the downside, in the sense that it may be more likely that growth outcomes will be lower than our forecast than that they will be higher. So there is a downside risk, and certainly the World Economic Outlook makes also a strong call for countries to cooperate, to try to resolve these trade measures, these trade concerns in a amicable way. And of course, then the flip side of that would be, if that happens, of course, we could also look at some upside here. But in general, I think the risks to our forecast is tilted to the downside.
Let's come to India then, Andreas, and you have reduced the growth forecast for FY20 by 10 basis points. Does this also entail the risks that you have stated in your earlier answers regarding global growth, or there are a few other factors that could contribute to this decline?
Yeah, I think certainly, I mean, like other emerging markets, India is also caught a bit in these twin headwinds that we're seeing from higher oil prices and also tightening financial conditions. And that is certainly weighing on the forecast. Here, I think for the current year, we had somewhat stronger than expected growth in the first quarter, and I would say the high frequency indicators we've seen for the second quarter also look quite robust, and that balanced a bit the higher oil price in the short term. But for next year, we're envisaging still a tighter financial environment and higher oil prices than we had previously. So there's a slight discount on the growth rate so far. What I would say, though, is that also even in the case of India, also I think the risks to our forecast are to the downside, especially since we can close this forecast cycle in mid-September. Oil prices have risen further, and of course, to the extent that the oil prices stay at current levels, and that would imply some downward drift or some headwinds for growth, and so there is risk that growth outturns could be a bit lower. That is higher than some positive surprise in our judgment.
Do you see, the overall structural reform that we're witnessing within the country, also the overall economic recovery cycle supported by the domestic demand led pickup to be a tailwind, if at all there is a possibility of an upside to this target that you have put?
Yeah, I mean, I think the demand side has remained quite robust, and our forecast embeds a view that both consumption will remain strong and also investment will gradually improve. And of course, we'll have to see a little bit how the latest market fluctuation will impact. Again, I would think that if I look at the overall picture at the moment, I would see a bit maybe more reasons why growth could come out a bit slower than what we forecast, and they could come up higher. But I think so far, that at least through the second quarter, I think the numbers have been quite robust.